Ex-PNB President and CEO Datuk Abdul Rahman Ahmad has been appointed as CIMB Group Holdings' new group CEO. He will also be the new CEO of CIMB Bank. In a statement, CIMB says the appointment will take effect on June 10th and he succeeds Tengku Datuk Sri Zafrul Abdul Aziz, who is currently the Finance Minister. This confirms an earlier report by theedgemarkets.com quoting sources that Abdul Rahman would be taking CIMB's top post. In a statement, CIMB Chairman Datuk Muhammad Nasir Ahmad welcomes Abdul Rahman, saying that he brings a fresh perspective to lead the financial group's continued transformation. Abdul Rahman's career in corporate Malaysia includes leadership roles at MRCB, Media Prima, and he also helped establish Equity Nasional Berhad. Carlsberg Malaysia has decided to suspend the quarterly dividend payments for FY20 to ensure a more prudent focus on cash and liquidity. Explaining its rationale, the brewer says its intention is to strike a balance between the long-term health of its organisation and dividends to shareholders. Thus, there was no dividend declared for the quarter, a contrast to the first quarter of FY19, where the payout was 21.5 cents per share. Carlsberg's earnings for the first quarter fell 16.7% to 73 million as COVID-19 affected sales and the subsequent containment efforts led to suspension of its operations. Revenue dropped 10.6% to 589.9 million. MD Stefano Clini says that the pandemic has severely affected its business in Malaysia and Singapore and its investment in Sri Lanka. Malaysia's movement control order and Singapore's circuit breaker took a heavy toll on on-trade sales and consumer sentiment. Clini says that although F&B businesses have started to cautiously reopen, he expects any recovery to be slow going. All three listed members of the Hong Leong Group saw a drop in their most recent round of results. Mothership Hong Leong Financial Group recorded a 26.8% drop in its third quarter net profit to 339 million as all its operating divisions recorded lower earnings. Revenue for the quarter dropped 12.6% to 1.14 billion ringgit. Hong Leong Bank's net profit for the third quarter fell by 15.69% to 534.8 million due to a mix of lower net income, higher operating expenses, and 121.2 million allowance for impairments. HLB's revenue declined 3.2% to 1.13 billion. Finally, Hong Leong Capital got it the worst, with third quarter net profit almost halving from 20.4 million a year ago to 11.1 million. Revenue for HLC declined 12.4% to 68.6 million ringgit. HLFG President and CEO Tang Kong Kun says the group will continue to manage its key business risks in the current era of COVID-19. HLB Group MD and CEO Dominic Fuda says the bank will continue to assist SMEs and local communities during the current difficult time, offering financial support to ensure they are able to return to a state of financial normalcy. RHB Bank saw its first quarter net profit drop by 9.4% to 570.9 million, mainly due to higher allowances for credit losses and lower non-funding income. Revenue also declined by 3.6% to 3.23 billion from 3.35 billion ringgit. In the BOS filing, the bank said its gross loans and financing grew by 3.6% to 176.2 billion, supported mainly by resilient growth in mortgages, SME and Singapore loans. Group MD Datuk Khairul Ramli says RHB's first Q numbers reflects its resilience and strong fundamentals despite operating under an extremely tough and unprecedented economic environment. He adds that while it is too early to judge the full impact of COVID-19 on business, RHB will continue to stay the course with its 5-year Fit 22 strategy while at the same time reviewing its objectives. Bumi Armada slipped into the red for the first quarter with a net loss of 224 million compared with a net profit of 62.2 million the year before. This as it recognised non-cash impairments of 314.4 million ringgit following the recent oil price collapse. In a BOS filing, Bumi says it proactively took this impairment hit as the OSV and subsea construction segment's asset values are affected. However, revenue for the quarter actually improved by 12.4% to 550 452.6 million from 491.6 million ringgit previously. Bumi's operating profit before impairment had actually improved by 45% to 242 million, says CEO Gary Christensen. He says the floating production and operation fleet continued to deliver stable operations, given that it is relatively immune to low oil prices. Going forward, Bumi says its focus remains on keeping its staff and assets safe from COVID-19, with emphasis on safety, sustainability, operational excellence and financial discipline.